Welcome back to part 2. In the previous video, I talked a little bit about South Africa's market rules and stuff like that. And if you guys are interested, please go read up on it. It's a great resource. If not, then I'll probably have something around here to link back to that previous video. Now, the secondary look I want to take is kind of like a general overview of what makes up their entire economy. What do they export? What do they import? What things they're dependent on? What stuff do they make? What essentially makes their economy turn? Just a quick disclaimer here. I'm not a licensed financial advisor. I'm not a broker-dealer. I'm not anybody that you should really take seriously. Everything that I mention or talk about or show here is purely that of opinion. Any actions that you take, the sole responsibility befalls upon you, as you are the executor of your own actions. Hey, editor redemption here. I almost forgot about this, but I just gotta say, before I talk about any of this stuff, I need to talk about today's sponsor, which is absolutely no one, because I only have 60 subscribers right now. First up, I'm gonna give you the TLDR. Firstly, South Africa hasn't really recovered since 2008. Most economies haven't really recovered from the 2008 crash. Just note that when one major economy comes crumbling down and it takes everybody with it, they don't kind of recover at the same rate, especially with the way that essentially South Africa is kind of structured right now. Right now they have a lot of, on paper right now, they trade a lot with the surrounding countries around them. Their economy is mostly made up of a service economy, manufacturing and agriculture. Service by I mean essentially technical support and stuff like that, but for the most part that stuff's usually sourced out to India. And manufacturing, which is mostly centered around automobile productions. And agriculture, there is some little issues with that because only about, although they have a lot of landmass there, right? Not the entirety of that landmass doesn't mean that you can farm on every acre of that land. There are certain areas where they just can't farm it. Okay, so to start off, most of the stuff I found on their Wikipedia page, I did a little light reading into what I think is their national website for just the economy of South Africa and everything, but this is basically what I gathered in a kind of like a TLDR format. The stuff that I kind of cared about, but there is a whole slew of information there, and I'd say go check it out. And like I said in the previous TLDR, their economy is mostly made up of services, manufacturing, and agriculture right now. Their current top exports is mostly mining related, so gold, diamonds, wines, which is in the agriculture, iron, platinum, non-ferrous metals, electronics, machineries, and machinery equipment, motor vehicles, fruits, agricultural food stuff, which could range from anything, it's just the general broad term for it, and ground and military air hardware. Now some of the imports are kind of interesting because if you look at it, they had some they export machinery and equipment, but they also import it as well. And this is mostly centered around drilling and mining equipment that they import. For chemicals, there is a whole slew of chemicals that they kind of output, but I didn't really go too deep into it. They also produce a lot of petroleum products, scientific instruments because of the platinum and palladium that they have down there. Platinum and palladium, if you don't know, and that's a hint, it's used for a lot of scientific equipment. It's also used for glass making and a few other things that only they can do. And they also export some of the food stuff, which is basically just agriculture in itself. All right, so on to their GDP. I'm going to attach a link on the bottom here to on the description to just so you guys can follow along if you guys choose to. If not, then I'm just going to pull it up here. Now, they weren't doing so hot this year, and it's kind of really. I don't think the virus really helped them at all. And if you guys look back out, the last time they had a somewhat dip was back in around 2008, when the whole financial crisis happened. But since it happened, as you guys can see, they just basically fell off a cliff. One of the ways that it was explained to me was that think of GDP as essentially like a company where you want the company to keep making money so they can keep paying you your higher salary and everything. There's growth and everybody's happy, right? Now, imagine the company takes a massive hit and they don't have any money to really pay as many employees anymore. People start getting laid off. You might get laid off, you might get wage reduction, and essentially the company's doing what the company needs to survive. So it's saying that we don't have enough money to keep everybody here anymore, or we don't have enough money to keep buying this sort of stuff. And that's usually bad, because then they start running into debt, and a whole slew of bad things starts to run into the company if it incurs a lot of debt. I know it could be wrong and misinterpreted by a couple academics here and there. You guys can explain it however you want in the comments below. That was in no way to try to bait you to leave a comment. So where do I go from here? Well, this is actually kind of how I stumbled across this trade, and stumbled across actually South Africa in general. Is I was looking up something called the GDP to market cap ratio, and typically this is considered a Buffett indicator, because it's usually telling you when the stocks are essentially overvalued or undervalued. Typically it starts at 100, but 100 means it's fair valued, in and around there, and then anything sub 100 means that these stocks are considered undervalued for what the GDP is indicating. But if it's above 100, then typically it'll be considered overvalued. And it can keep going up like that. There are certain scenarios where it does keep going up. But essentially, it's one of his indicators he uses for telling whether a market is certain market is actually prime for investing and not investing in. This is something I kind of looked at a while ago, but if you look at the US GDP to market cap ratio now, we actually rose. We did have a little correction back during the crash, and that kind of corrected us quite well. But since that crash, not only have the US actually have resurged almost by double, it's actually higher than it was back in 2008. This is actually higher than it was back in 2000 over here on Fred. And always go to first sources. This is something I learned from Martini Rita, linked to her Twitch channel down below. But as you can see, we back in at our peak right around 2008, they dropped down to 92%. And this is kind of like old data right now. That's why I was using the other one. But the last recorded one on the St. Louis Fed was 153%. And according to this other website over here, it's saying that we were about 170%. The GDP to market cap ratio basically implies that stocks are overvalued, but it's not always 100% definitive, because things can happen in between. Like the market cap can actually grow, the GDP can grow or shrink or whatever. Like numbers change all the time. A lot of political and economic decisions get made that could change the course of an entire market, and it could lead to maybe the GDP to market cap ratio correcting itself and coming back down without us feeling any of the adverse effects. But typically the fastest you'll ever see it correct itself is when we have major crashes. Since we've established that the market cap GDP ratio for the US is somewhat overvalued, I want to turn your attention to South Africa. And I totally came across this by pure accident. I was just looking at other countries, and I saw that Turkey was undervalued and everything, and I decided to think, okay, well, what is something that's super overvalued that no one's looking at? And then sure enough, I found South Africa, which is now quoting right now about a 343.5% market cap to GDP ratio. So essentially, they're more than triple overvalued. And if I was to look back at the St. Louis Fed, which I'm going to pop up now, as you can see, back in 2008, they went from basically 129, and into 2008, they basically had about 250, and then they dropped down. They felt a little bit of the effects in the preceding years, but they just gone nothing but up. And I don't know about you, but again, this number doesn't make any sense to me. That would usually tell me well, South Africa has something that we don't, right? And you'd be kind of wrong, because if you look at their imports and exports, you would also see that the demand for certain goods that they export are not in demand anymore, and that typically when you look at their imports versus exports right now, the imports are actually overshadowing the exports, which could lead to a negative GDP. I just wanted to show this website for World Bank really quickly. This is where the St. Louis Fed kind of pulls their data from. You can see where I was talking about the imports overshadow the exports, and it seemingly pivoted a little bit, but it's really edging really close to it. The data on this thing is only from 2018. If you want more up-to-date data, you'd have to go to the official website to see what their imports and exports actually were. And from what I saw, they kept saying that the demand for their export goods on the mining stuff is actually on the decline. But when I looked at some of the metals futures and metal markets, which I'm going to get into next, that might be the case, but it might not be the case if you consider some of the other factors that are outlined right now. I'm not going to lay claim that I know any of the intricacies of agriculture or anything like that, or if, you know, there's only specific fruits or vegetables that can only be grown out of South Africa. I'm not going to name any of that stuff. The only reason I kind of shied away from it is because there's a lot of factors that, from what I see, that doesn't make that country specifically special with, you know, exclusivity for certain fruits and vegetables and stuff. And I usually like it when a country has very exclusive things to their name. And as you can also see, like, it was also noted there that the agriculture is not very viable there because a lot of the landmass is very dry and it's basically landlocked. There are only about 13% of their land can be used to produce crops, and only 3% of those actually have high potential yields for them, so they're actually good for farming. I'm not going to focus on it because it's also a difficult sector, blah blah, etc. One of the reason why I chose metals is because I looked at their GDP and it's actually one of their top exports. It's actually a very huge industry over there. Focusing on their mining, they mine a bunch of different things, like I mentioned, like iron, coal, etc., which is most of this is easily mined outside in the world. The number one export was typically coal. But if you guys know anything about, you know, the way China's going, they're trying to kind of wean off coal right now, and they're aiming for this whole green China thing in like 2030 or something like that. But what I looked at specifically was that, you know, like I said, I like to see exclusivity in certain countries and what they have, and certain companies if they have some sort of exclusive rights to things, like, you know, how Apple has the Apple iPhone, it's very exclusive to them, that sort of thing, right? South Africa doesn't have the full exclusivity of this, but they have a good chunk of the world supply that is very accessible, and it isn't behind any sort of like regulation issues or any sort of trade related issues as far as I can see right now. Right here is just the palladium breakdown alone. There's a lot of platinum and palladium, but just generally this is kind of the quick breakdown of it. But as you can see, these two are listed in the high-risk jurisdiction, mostly because of either economic or social turmoil within those countries. But all the other countries around here, like Zimbabwe, I don't know what they mean by other, United States and Canada, they have a very small fraction of palladium, which means that it's not as abundant there. And if they were to go essentially mining and exploration for that, mining and exploration costs a lot. Whereas if you go to a place like Russia or even South Africa, which South Africa is a little bit more accessible than Russia, you would have an easier time because it's just so abundant. You would be spending a lot less money doing the exploration, and you'd actually have a easier time just trying to just excavate the platinum palladium from the earth from these places. I'm going to start talking about platinum palladium almost interchangeably right now because for the most part they're both used kind of in tandem for the same kind of industry and so forth. I know they're not like, it's not a one-for-one comparison, but I'm just trying to condense this as much as possible to save as much time as possible. But if you look over here, here's one of the articles that I came across that was talking about like the global platinum demand to decline 7% in 2020, suggests the global data, and it's mostly talking with their two biggest sectors, mostly in automobiles. China and Japan, their top two platinum nations, platinum consuming nations, account for 35.5% of the global demand. And typically what they were doing was that they were getting this mostly to make the catalytic converters, but they were also using for, essentially investments in jewelry as well. But with the whole pandemic issue, they had to shut all the production of that stuff down, which caused for a slump in demand for platinum and palladium. Now, why I think that we're going to see somewhat of a resurgence, and why I think platinum and palladium is the play, is because if you guys do look a little bit further into some of what the fuel cell technology uses, or even some of the other battery tech uses, they use a lot of platinum and palladium anodes, and they have to use that specifically because the conductivity that it provides for these batteries, it makes it incredibly more efficient. So what it means basically is that the energy transfer, there's not much loss coming out of it, as well as you can basically charge it a little bit faster because it conducts better. Moving on to the WPIC, the World Platinum Investment Council, or whatever you want to call them. Basically, it's a group that kind of tracks the demand for platinum and various other metals and stuff like that. But according to their research, they were saying that in 2019, about 8,300 and whatever kilo ounces of platinum were demanded back in 2019. And the way you read this chart is this is it's moving forward. So as you can see, this year we saw a decline in automotives by 464, decline in jewelry by 274, industrial -79, but an uptick in investments. And that's kind of weird because if you look at the total supply right now, it's seemingly less than before. If you guys remember about supply and demand, the lower your supply and the higher demand indicates higher prices, but the lower demand and higher supply means that the prices drop. Now, taking into account that some governments are even mandating that all vehicles on the road have to be some sort of electric vehicle, this bodes very well for people with a large supply of platinum, which could mean that, and potentially means that demand is going to shoot up while the supply is, essentially dropping down. So what do they do once supply drops down? Well, for South Africa, they would have to go and mine this thing, which is somewhat more abundant there than across the rest of the world. As you can see, what they're projecting, and again, this is a projection, it's not definitive, but they're expecting that South Africa is going to take the lead in supplying most of this platinum supply that the world's going to demand. Like you see Zimbabwe, North America, Russia, others such as Canada and so forth, decline in current stock, and some mostly from recycling as well, but most of it's going to come out of South Africa. Okay, so this is kind of running a little bit longer than I thought it would, but I'm just going to cap this off really quickly with looking at EquityClock. And if you guys don't know what EquityClock is, it's basically made by this man named right here, John Vialox. I hope I'm pronouncing your name correctly, but he does a lot of seasonal analysis for stuff. And the way to look at it is basically if we are coming into seasonality, as in price action in the chart looks like we are coming into some sort of historical behavior, then likely we can usually see something like this play out, which is what I'm kind of thinking, but I'm not fully saying that I know that this is going to happen definitively. This is just an educated guess based on the world I look around me. But typically what we'll see is that we'll see in late December, we'll see somewhat of a drop-off, and then we'll just keep seeing a rise up until March. And that's what I'm thinking of in terms of a play in platinum. And then this is also the same thing for palladium, where in late December we'll see somewhat of a decline, and then we're just going to see a jump back up at least into late Feb, early March, something like that. But typically if it jumps up, take your profits accordingly. That's the suggestion, not advice. But the way I'm looking at this is basically it's going to be a play into possible fear for a new president coming in, because, and again, these guys have great data. They showed a graph where if the incumbent president wins, then typically the markets will keep going up and up and up. But if the incumbent party president loses, we'll see a rally because it's Christmas time, as well as the hope for a new president and stuff like that. We'll see a rally up until the new year, and then we'll start to see a drop in the stock market. And typically, when traditionally for old market theory, when you see a drop in stocks and stuff, and people are getting scared, they're going to fly to these essentially safe commodities to kind of store as much money as they can, or protect their portfolios as much as they can from any sort of market drop or any sort of fear.